US share market squeaked out some marginal gains overnight after a pretty slow start. Technology shares were lower and they initially drove the share market down. Most traders will be waiting on the announcement of US GDP due out on Friday in order to get a pretty good gauge on where the US economic recovery really sits. Given the recent weak economic data, most are expecting to see a slowdown in the US economic recovery. The New Zealand dollar has traded down over the past 24 hours after the official cash rate announcement. Early on Thursday morning, it was trading at 73.30, but over the past day, it is now trading at 72.50 and has also dropped about 50 points against the pound. As was widely expected, the Reserve Bank of New Zealand increased the official cash rate by 25 basis points to 3% on Thursday. However, a few of their comments did throw the market slightly. These comments related to references that further increases were required but were not a given, and that these increases may be more moderate than were expected in June. This was the reason why we saw the Kiwi dollar fall following the announcement. After taking in these comments, as well as the likelihood that inflationary pressures will continue to mount, we do expect to see another increase of 25 basis points in September, with the official cash rate topping out at about 5% by the end of 2011. For those that are on floating interest rates, they should expect to see further increases to their underlying rates. New Zealand wool prices have been edging higher right through 2010. Wool is not unlike other New Zealand agricultural sectors, with China currently driving most of the demand for the product. The outlook for fine wool for the textile industry should continue to improve along with growth in the Chinese economy. It is interesting to note that prices for fine wool have increased a lot more than prices for coarse wools over the past 12 months. An increasingly wealthy middle to upper class in emerging economies is driving most of this demand for natural premium textile products. This is offsetting a slowdown in the more traditional high-end clothing markets of both the US and Europe. However, as these economies do start to improve over the coming year, this should provide a further boost to local prices.